Good evening, everybody. This is Andy Pedraza with Special Effects Academy, and we're on the start of the week session for May 26th of 2019 for the Forex Trading Room. As usual, we'll go through our regular agenda, the prior week, the results for the week, any open trades, closed trades, and the like, our ledgers. We'll go through our currency strength meter for the last week and the last 30 days, any fundamental announcements on the calendar, a look at the daily charts for the major pairs, a few of our setups in progress, and some words in conclusion. We'll start out with our ledgers. You're seeing the long-term account ledger right now. There's been no trades closed. We have one trade open in Aussie CAD short for the last week or so. It's not moved far from our entry point, so we're still waiting on the evolution of that trade, and we have yet to find any more trades to get into. Our intermediate term account had a nice boost this week as we did close out multiple trades at profit. So this account in closed trades is up almost 12% for the fiscal year. So in the first month and a half or so, that has been the result. We still have some trades open. We had, of course, some back and forth with the pound last week as Theresa May announced her resignation to happen on June 7th. So basically alerted that she would be resigning in a couple of weeks, and she will be staying in her position until a successor is identified and ratified by the party. So this did make the pound go up, go down, go all over the place, and finally settle to, I guess, going back down. Jury's still out as to whether that movement is going to continue, or we're going to have a little bit of sideways for the foreseeable, well, for the next few weeks. Something does need to give at some point, but again, jury is still out. So these are intermediate account results, and then the short term, we had a down week. So we're down 5.8% for the week. The account is still at profit for the fiscal year, but we did have a little bit of a retracement. And again, mostly due to the pound pairs going all over the place. And our risk control, we don't risk too much in any one trade, but that also means that we are likely to get stopped out on trades, even when they do ultimately tend to go in our direction, simply because of risk control. So that's the way it works. It's a feature, not a bug. So those were the results for the week. As I said, negative 5.8. Overall, still positive for the year on the account. And, well, a new week is beginning, and we'll see what that brings us. Notes and opportunities for improvement. As I mentioned, the down week on the short term, a big leap forward onto the intermediate term account as we closed out multiple profitable trades. Also, as mentioned, Theresa May announcing her resignation for June 7th and to remain in office until her successor is identified. President Trump is in Japan for trade talks this week. I think he arrived yesterday. Tomorrow is the Memorial Day holiday here in the U.S., so trading is probably going to be light until the evening when the Asian markets kick in. European parliamentary elections are also happening this weekend. This is the last of 4 days of voting across the European Union for their parliament. And of course, several potential moves in the market are starting to raise their head. So we'll be keeping a close eye on several pairs and seeing what we can gain from that. More to come on that, of course, live as we trade. Relative strength meter for the past 7 days and the last 30 days. So volatility on the 30-day chart is mostly unchanged. I think it's off by a couple of tenths of a point between last week and this week. So volatility for the month is now at 5.29%. That's towards the higher end of the volatility, but still nothing abnormal. We can see that the main winners have been the Swiss pound and the Japanese yen, with really no clear losers. Well, we can say that the Kiwi has been a loser as has the Aussie. But again, they haven't done a significant move in quite a while. For the last 7 days, we still have the Swiss as the overall winner, closely followed by the Japanese yen. The pound, of course, the big loser, followed closely by the dollar that also lost some ground this week that just ended. Volatility for the week came in at 1.17%. Again, not too high, not too low, rather really a little bit on the lower end of things. There was a lot of whiplash in the market as currencies went up and down by about the same rate, but there was no sustained move in most of the currencies. Fundamental announcements for this week coming up. We have the Bank of Canada interest rate decision on Wednesday that will be traded live. Well, I should start with the fact that we do have a Bank of Japan governor's speech this evening at 11 p.m. my time, Eastern time. That will not be traded live. But we will be paying attention to what the effect on the yen is. Trading live, as I said, Wednesday, the Bank of Canada interest rate decision. We have GDP annual numbers, yearly numbers coming out of the U.S. on Thursday morning, also to be traded live. And we have the same coming out of Canada, yearly GDP on Friday at 8:30 a.m. Eastern time, also to be traded live. So those three are the live trades on the fundamentals for the week. Not a busy calendar, as you can see, and the only one of real interest that has good potential is, of course, the interest rate decision out of Canada. So those are the ones we'll be trading live. That will be included, of course, in the email summaries and calendars for the week. And with that, we move into our charts, starting with oil. We have oil having crashed. It's actually dropped below $60 a barrel for the first time in quite a while, since sometime in March, I'm going to say, was the last time it dipped below 60. It is trading at 58 in change as the week begins. We'll see how it continues to evolve, but we do have a break of all the upward trend lines. So technically, it's in sideways in a consolidation pattern right now, but we'll have to see if it continues dropping or if it starts tracking sideways for a while before picking its next destination. Euro dollar continues inhabiting the downward channel. We had it move down and move up both last week. So as I said, there was a lot of whiplash in the market as different things started weighing on the currencies. It ended the week bullish, so it definitely ended the week higher than it started. We did get taken out of that old euro dollar trade we had with a small loss. We'll be keeping an eye on it in case there's a good opportunity for re-entry or indeed to trade it in the opposite direction. But for now, we're out of that trade as it did hit our adjusted stop loss. Pound dollar still extremely bearish, and of course, there's really no good news coming out of the UK. What with the resignation of Theresa May and the less than stellar outlook for Brexit. Boris Johnson is seen as the favorite to replace Theresa May, and Boris Johnson has been on record saying that he wouldn't mind the no-deal Brexit. They'll just exit the European Union and figure it out later. That's probably the worst-case scenario for the UK at this point, but it is something that Boris has directly alluded to in the past. So we'll have to see how the replacement of Theresa May works out. They're going to have a vote in the Conservative Party, figure out who replaces her. So they'll be campaigning for a few weeks and then having the actual election. So a lot of volatility expected out of the pound as everybody squares away and, well, as however the situation ends up evolving. For now, the chart is definitely bearish, but it did have a little bit of an uptick towards the end of the week. On Friday, for the first time in weeks, it actually gave us a bullish candle, and it ended up higher than where it had started the day. Still, it was a bearish week, and the pound ended up lower than where it had started out the week, but again, not by much. So We can also call it sideways, but it did hit a level of support, bounced off of it on Friday, and is trading slightly higher. Again, we'll have to see how the week begins to figure out what's going to be, what our approach is going to be as we trade it. USD JPY, also a bearish week. We had some yen strength or dollar weakness, take your pick, coming into the market towards the second half of the week, Wednesday, Thursday, Friday. We had 3 bearish candles in a row. It is very close to a prior level of support. We'll have to see whether it bounces up or pierces and starts going down. We haven't been trading this one in at least a week, so we'll see if there are any opportunities for us to jump back in. Of note is the indicators that I'm tracking here on the daily are still decidedly bearish. So we have the MACD and the Williams are pointing down significantly. And of course, we have candle action below the Ichimoku cloud on the actual chart, and a Tenkan Kijun cross into the bearish happening a couple, I'm going to say about three to 4 weeks back. So again, this is a bearish chart, and we'll see if we have any opportunities to continue trading it down, assuming it does continue in that direction. USD Canadian, we've been ignoring this one for a while, and for good reason. It is trapped in a sideways pattern. We've also had the collapse of oil prices below 60, which should have weakened this thing. But again, when oil was going in the opposite direction, it should have strengthened the CAD, and it didn't. So it looks like the CAD is ignoring what's happening with oil at this time and continues trading very sideways. So if that changes, we'll look for opportunities. For the time being, it is a pass. USD Swiss giving us a bearish signal yet again. So it has crossed the Ichimoku cloud. It's broken the inner trend line. It's angling towards the next level of support and an outer trend line. And we're already in it short and actually carrying a little bit of profit in the intermediate term account. So we did take the signal. Tenkan Kijun cross bearish as well, as we can see in the last 7-8 days with the blue and red lanes cross. So everything is telling us to sell, though very cautiously, and we'll see where that goes. Aussie dollar broke its bearish pattern, so it did hit support, bounced off of it, hit resistance, bounced off of that, bounced off of support yet again. So it is zigzagging sideways as it figures out whether it's going to do a test of the trend line and the upper level of resistance, or if it's going to try a break for the bottom. We all know that the Aussie is going through a period of weakness as the economic details out of Australia are less than promising. So the smart money would be on the Aussie getting weaker and this chart going lower. But of course, that is a longer term view. In the shorter term, it could very well do anything. But our bias is to short this pair, and we'll see if we have any good opportunities to do that. Kiwi dollar, much the same, but with very little retrace. It did, however, break the trend line on Friday. So technically, it is a breakout or a trend line break. But it is very slight, too soon to tell. Still a very bearish chart. And though we did take some profit or maybe some loss, I forget, one or the other. We were in the Kiwi dollar trade at any rate. I forget if we got out at a good point or if the retrace Thursday, Friday caught us poorly positioned. But either way, we're out of that. We've made some really good profit on the Kiwi dollar all the way down. We'll have to see if there is a further opportunity to continue going short as it gets very near the bottom level of support, or if indeed we're going to see some sort of breakout towards the top, which we can trade. So this one is on the radar, but no rush. Aussie Canadian is, well, like most of the Canadian peers, it doesn't seem to know what to do in the past couple of weeks, but it is still a bearish chart. It did a test of the trend line on Friday, seems to have bounced off of it. So this will be another interesting one to see where it, which direction it starts heading as the week begins. Euro Swiss open trade carrying profit, definitely a bearish chart. It's moved back into the old channel, and it is heading towards a very close level of support at the 111.60, so about 60 pips below current price. And of course, my ultimate target is the bottom of the channel. So that bottom blue line, which you can't see because it's below the visible area of the chart, but it's quite a ways away, and that is our ultimate target at this point. We'll see how that trade evolves. Again, open trade and a carrying profit on the intermediate term account. Euro pound, also a very bullish chart into pound weakness. We took a very nice bit of profit off the table on Friday or Thursday on this pair in the intermediate term account. And today, as the market opened, I re-entered that position in the same direction. So we are trading it long. We're banking on European elections giving a little bit of a boost to the euro, and all the situation we know about in the UK continuing to hammer the pound. So we are trying to trade it up. It's got a reasonably tight stop, I think somewhere in the neighborhood of 60 pips. So it's really us testing the waters, and we'll see if it breaks through the level of resistance right above current price, and again heads towards the top, which is our ultimate destination. We have taken profit off of this pair already, as I mentioned. So this, as I said, is us jumping back in and seeing if there's more to be had. Euro JPY is looking like it's towards the bottom. So we're seeing that yen strength either because of the jitteriness of the Europeans or simply the Japanese economy getting a little bit of good news. Plus, we have some euro weakness as well. So this one is heading down, but I'm still not too sure I want to short it. I wouldn't go long for any reason, but I don't know if I'm ready to go short on the Euro JPY just yet. It's on our radar, but we'll continue watching it for a while. Euro Canadian, same thing. It's in no man's land inside a wedge. It seems to be going in all directions, going very sideways. So another one where I would dearly, dearly love to be shorting this pair into Canadian strength, but the Canadian hasn't been doing anything strong for quite a while. So another waiting game. We'll look for a good opportunity to jump in either direction. For now, just sit and wait. Pound JPY, very nicely bearish chart. We'll have to see, of course, how the week opens, but this is probably a pair I would be trading at the drop of a hat if it does continue to go lower, either the short-term account, the intermediate-term account, or both. So this one is very much goes to the top of the radar, and I'll have to see how the first 24 hours of the market evolve on this pair before I jump in. Aussie JPY gone sideways in the past couple of weeks as it hits its support and was unable to really pierce it. It is still following a downward trend line. The Tenkan Kijun cross back in somewhere early April was nicely bearish, and that bearishness continues right now. It still has some room towards the bottom of about, I'm going to say, 250 pips or so, which are a decent option. This is one that I definitely would like to short if I see some more yen strength coming into the market. So this one's also high on our radar, but again, I'm going to wait for the first 24 hours of market activity to clear to see if this one is ready for a trade, and it would definitely be towards the bottom. This is another pair I would not go long on for any reason. Euro New Zealand continues heading up, but took a little bit of a breather, a little bit of a retrace the second half of last week. Nothing major. It's still heading up, but it did go back down below the level of support, which was prior resistance. It has cleared that resistance. Resistance became support. It did give us a higher high on Wednesday, Thursday, and then Friday it just went looking for the outer trend line. Another one that we'll see how the week begins. This is obviously a bearish chart. We would be trading it up, but we want to see how the week begins. Pound Canadian, we traded this one down. I think we took some profit off of it. We also took some loss off of the pound CAD as it did retraces towards the end of the week on the short-term account. It did break the trend line, a very steep trend line, by the way, but it did break it. It tested support. That support held. It did not pierce it convincingly. And again, I'm very bearish on the pound right now for obvious reasons, but the Canadian has not been cooperating. So we'll keep an eye on this one, but no rush. And last but not least, pound Swiss. It gave us the bulk of our profit last week. We took almost all of it. This was in excess of 100 pips of profit, and that on the backs of 400 pips we had taken on this pair in a prior week. So all in all, this has been a good money maker for us, and I would be looking to re-enter this in the same direction if the market does confirm that that's what's going to be happening. So actually, I think we already did enter this one. I apologize. We already did re-enter the pound Swiss on Friday. So we're already in this pair. We're a little bit down right now, but again, it was the Friday retrace, and we'll just hold on to that trade. And expectations are still that it will do a test of the very bottom of the chart, and that is hundreds of pips that we want for us. So I think the target right now is 400. Yes, indeed, 400 pips of a target against 200 pips of a stop loss on the intermediate term account. So no change there. We'll be holding that trade until it either fulfills or takes us out. And that is the end of our charts for our weekly review, start of the week review. The setups we see in progress, as mentioned, Theresa May announced her resignation, and Brexit is still on with a vengeance. Boris Johnson is the favorite to replace May. That's not a given. He's simply the most likely at this point, and he is a no-deal Brexit supporter, so that has to be taken into account. Switzerland, the Swiss pairs are starting to move against other currencies. We're starting to see a little bit of backbone coming out of the Swiss, which we've taken advantage of so far. Let's see if that continues. Canadian pairs, I mentioned them because they're very odd right now. Oil corrected, but it doesn't matter if oil goes up, oil goes down. The cat seems divorced from oil right now. And that cannot last. At some point, it'll come back. But for now, be very cautious trading the Canadian pairs. They do not seem to have any rhyme or reason. U.S., the USD pairs, same thing we said last week. Despite the trade wars with China, political unrest in the U.S., the dollar seems to be simply going into dollar strength. It did have a little bit of a retrace last week, but nothing significant. So trade it, but be cautious. There will be payback at some point, and I am expecting a very large correction on the dollar at some point, but that could be tomorrow, or it could be in 5 years. So we're not going to trade on that. We're going to be trading on what the market is actually doing day to day. So just be aware that whichever direction you trade the dollar, be very cautious, because it is in a very, very odd position, gaining strength for really not much reason, and at some point that will end. Last but not least, Australia. We have the Australian weakness that I've been alerting for quite a few weeks now. That is still playing out. We really haven't seen the Australian dollar move into a strength play in, well, honestly, in more than a year at this point. The weakness started late December of 2017. So the Aussie weakened all through 2018 and has continued weakening through 2019. And we're already almost halfway through the year. So if it continues through December, that's 2 years of weakness on the Australian. And honestly, I see no reason for it not to continue into December. So we'll see how that plays out. I would not be going long on any Australian pair, but I would be trying to trade them down cautiously, because again, all things come to an end, and at some point the Australian dollar will bottom out, and then we'll have to either a period of consolidation, sideways, not much movement, or it will bounce and start hitting up with a vengeance, either or the other. So another one that is probably going to be very profitable to trade, but be very careful. And some parting words, and this has been a theme for me for most of my trading career, is predicting. We do not predict. No one can know which way the market is going. Anyone who tells you that they know which way a market is going is either deluded or is lying to you. I don't care if they end up being right. If I say that the dollar is going up tomorrow and the dollar ends up going up, that's not me being right. That's just dumb luck. So don't believe anybody that's in the prediction game. That's not how trading works. The way it works is that we enter multiple trades, we let go of the losers, and we shepherd the winners. That is what's going to make us profit over time. And of course, some weeks the losers are going to outweigh the winners. It's never perfect, but over time, the odds should be in your favor, and your equity and trade management should be what pushes you over the line. Your accounts should be getting bigger over time. If they're not, then there's something wrong. You need to stop and figure out what that is. But it's never going to be because you're always right. It's not about being right or wrong. It's about making profits. So stop worrying about being right. I don't care what you're using to choose your trades. Just get into your trades as best you can. That's not the important thing. The important thing is what you do after you're in a trade, how you manage it, and how you control your risk. Never risking more than a small percentage of your account on any one trade. Never risking more than a slightly larger but still small percent of your account on all your open trades at any one time. That is what's going to make you money. So that is it for me today. That's the end of our start of the week review. Of course, we'll be sending out the recording and some comments and the calendar and all that later tonight. Anyone have any comments or questions before we drop off?